Activist investor Elliott Management taking a large stake in Nielsen to push the TV ratings company to sell itself. This after Third Point pushed Campbell's to sell. Is this the start of a buyout boom? Leslie Picker joins us with a look. Hi, Leslie.
Hey, Sarah. Private equity firms have more than $1 trillion to put to work, and that could provide opportunities for activist investors. Nielsen is the latest example of that symbiosis. Elliott disclosed that it effectively owns about 8% of the company, and a source tells me that the hedge fund is pushing Nielsen to sell itself, and private equity has already expressed interest. Nielsen was acquired in 2006 by a consortium of 6 PE firms, including Blackstone, KKR, and Carlyle. Those three have raised or are currently raising more than $50 billion worth of capital combined that they need to deploy. Nielsen may be of interest to them because buyout shops tend to favor assets they've previously owned. For their part, Nielsen is already undergoing a strategic review of its buy unit, which provides retailers with sales and market share data. Elliott would prefer a sale of the whole company, a source told me. Now, Nielsen says that the board and management team are actively focused on executing the company's strategy to achieve sustainable, profitable growth and drive long-term value creation for all shareholders. In just the first half of the year, though, Elliott initiated 17 activist campaigns. That's more than the other 3 most active investors combined. And M&A has been the second most popular objective for activists after a board change, rising in 34% of the public campaigns this year, guys.
Leslie, are we seeing private equity use its cash with traditional hedge funds, or are we seeing private equity wanting to do some of this itself?
So we see certain cases. I think what you're getting at here, a public investment in private equity, or private investment in public equity, where private equity firms will take a stake as an activist would and kind of push for changes like we're seeing here. That's increasingly becoming more common. But in terms of working kind of side by side with hedge funds in order to buy out assets, we don't see that too often, especially since the trend is more toward private equity fundraising versus hedge funds, which tend to be losing assets and therefore aren't sitting on as much dry powder as you see in the private equity world.
Any other industries specifically we should be watching for this?
You know, I think technology has been a huge driver of capital for buyouts as well as activism lately. There's a large trend. The buyout world has figured out a way to capitalize on the technology sector, an area that previously they've shunned because it's been a lot more difficult for them to take out leverage loans against those assets. That has become a lot more institutionalized. There are more private equity firms cropping up in the technology sector. And similarly, that's become a big area for activist firms and activist targets, especially in the first half of the year. That was above and beyond the largest sector for activist involvement. So I would expect to see a lot more kind of given those two trends in the technology sector in particular.